Hi there. A very good morning and good afternoon to all of you, depending on wherever you're hearing me. This is Simply Stocks, and today I want to bring to you one stock from the cements pack, Heidelberg Cements. Can one buy at these levels or one should avoid it? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Heidelberg Cement, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. This time around, I have started with a 1 year membership in which you pay for 10 months and you get a 12-month subscription for the $10 membership. So you pay $100 for the year and you get 2 months extra for the same membership. For detailed market or company talk, or if you have a number of queries with a number of stocks with you, you can directly email me and we can work things out with a fee. Also, if you cannot pay through card, kindly do email me. I'm going to start with something that could be a bank transfer, etc., but that will be later on once I get some emails from you all. Now about the company, one of the leading mid-cap cement firm is Heidelberg, prevalent globally across continents. Market cap of the company is around 5,000 to 5,500 crores. Produces Portland cement, ready-mix concrete, and asphalt products. Very good payment of dividends, and once the earnings pick up even more, I think the dividend payout will become even larger. The group comprises of 30,000 employees and 3,000 locations, so it is quite a decent company in terms of its bandwidth, is Heidelberg. If you look at the numbers, then market cap of the company is around 5,500 crores, as I have explained. Sales came out to be 595 crores versus 525 crores year on year, and these are December 2020 numbers, so March numbers has not come out. So 5% increase in sales, which is pretty good. Profits were flat year on year. But economic revival, I guess, will even more help the numbers, and that's why there is a lot of buying happening in the mid cap cement and large cap cement counters. And I think once things cools off with the pandemic, things will get even better on the cement and construction phase. So what I believe is that you have to be patient if you are into this sector, and this sector should do well. So return on equity of 21%, operating profit margin of 24% is decent. And according to, you can say, the sector averages, this is above average, which is good, and trades at around 40 times earnings, current earnings. But overall, I would say going forward, I believe that things will get even better. So this PE ratio would reduce because the earnings will improve. If you look at the performance, then stock is breaking out after a 5 year consolidation. It is breaking out, which is a very good thing, and it looks like that we could have a multi-year bull run in this company. The sector as a whole is on a surge. So as I have explained, that it has been around a decade for this sector not to do well, apart from one or two companies. Ultratech and ACC did reasonably well during that 2014 to 17 phase. But I believe that this is something that is going to be a 2 3 year time frame move once the pandemic ends up. So the performance, it looks like, is picking up. Numbers are decent, not that bad, which is good enough. Dividend payout, they are increasing it, but still low compared to other companies, the larger companies, and probably it's a mid cap cement company, so it's not up there at the moment. Strong domestic institutional holding, 14% free float, so 86% is with the large investors. So I believe that the company is protected in that sense, that there is strong domestic institutional holding, decent promoter holding, and only 14% free float is there. Increasing debt is a worry and interest burden is increasing. Now, that is a cause for concern because in most of the cement companies, after consolidation, debt has come down. So, this is one you can say threat that is looming and for investors to look out for in the coming quarters. So why the upsurge has happened in this sector? So domestic economy is on a recovery. So after what has happened before 2020 up till 2000 and you can say from 2018 till 20. So for 3 years, Indian economy has been under doldrums. But it looks like from FY22 onwards, things will become better. And on the ground, it seems that construction activity has picked up. Road construction activity has picked up big time with 35 to around 30 to 35 kilometers of road being made every day, around about that or just over that. So things will get better. Yes, this pandemic is a real, you can say, a threat to this. Probably 6 months, probably this year, FY22 could be difficult. Once this subsides and things become normal, I think cement industry is going to pick up big time. Real estate and invest space is getting back on track, but we are having some hindrances. So probably next 2 quarters we could be having some volatility, but things should over a 2, 3, 4 year time frame will get better. The other worry apart from the debt of the company is the raw material cost because of the oil prices rising, because of the commodity prices rising. Although per bag cost of cement has risen a lot, I still believe that commodity prices could continue to rise, so raw material cost could hinder the growth. But again, the company would be primed to pass on the price hike to the consumers, but that requires a market leadership. And here is where probably ACC and Ultratech would do much better than something like Heidelberg. But so this is one kind of a worry that is there apart from the interest burden that the company is having. Projection of further up move in next 2 years is possible. So by 23, 24, FY23, FY24, things will be much better than where we are at. We are at the moment, and sector has come back into favor. That is most important part, that people are looking at sectors of cement, steel, etc. to buy in, and I think this rally could continue for a year to 2 years time frame with a little bit of correction here and there. So my call on this stock is probably hold if you have it, then hold and buy only on major decline. So the stock market has run up a lot, even with that correction of 1,000 points that we saw recently in March. The prices has gone up again. So probably wait for another correction of 800 to 1,000 points and then look at this sector, look at these stocks. Cement sector should do well in the next 2 to 3 years and take it as a long term bet. Do not try to trade now into it because the valuations are stretched at the moment. Keep relevant stop losses in place if you want to trade into such stock, but I would say avoid trading into it. So this was my video on Heidelberg Cement. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.